October director's cut, so we'll be talking about August production. This is the very first time I get to say this, but I always look at the weather. Weather's a big deal in North Dakota, and of course, winter is coming upon us, so we're not sure what the weather holds for us as we go forward. But looking back to August, the first and maybe the only time I ever get to say this, 0 days that were too windy to frack wells. I've never seen that in all the time that we've been tracking the weather and doing these director's cuts. There was one precipitation event, so there was a little 2-day span in there when oil and rigs had some trouble moving on the county roads. No days with wind speeds over 35, and of course, no days colder than 10 below. It was August, but it's very unusual to have it that calm and not have wind. There's a lot of good news to talk about in North Dakota today. New record production in oil and in natural gas. For the first time ever, North Dakota produced more than 40 million barrels of oil. That equates to just under 1.3 million a day in August. Just shy of a 2% increase, 1.7%. That's 22,000 barrels a day for an increase. Interestingly enough, 17,000 barrels a day of that was on Fort Berthold Reservation. So when you look at the total increase of 22, 2/3 of that, roughly, was on Fort Berthold. And so again, following those rigs and those completions, that's a pretty major increase. We're going to see that reflected in the flaring numbers when we get to talking about that. And so that's still an issue and will be an ongoing issue. Record gas production, over 75 billion cubic feet, almost 76 billion cubic feet produced in August. New all-time high in terms of daily rate, 2.44 BCF a day. That's up 1.8%. And the reason I mentioned that is for the first time in a long time, oil and natural gas rose at pretty close to the same pace. And that is good news. I think you're seeing the results of drilling and completions spreading out a bit and moving outside that really concentrated core area where the gas oil ratios are so high. Absolutely doesn't mean we can take our eye off the ball because flaring is going to be an issue continually going forward for the next couple of years. New all-time high, first time ever, more than 15,000 wells producing in the state. So we've never before produced from 15,000 wells, never before produced 75 billion cubic feet, never before produced 40 million barrels of oil in a month in North Dakota. All new groundbreaking numbers. The rig count's pretty strong, 67 today. Still, industry would like to push that number to 70 if constraints can be worked out. They'd like to be at 70 by the end of the year based on the meetings and discussions that we've had. Interestingly enough, kind of going back and redoing the hydraulic fracturing numbers for July and August, we got to that kind of magic 45 crews. And so I know when we talked last month, we thought we were still in the low 40s, but it would look now, based on the number of frac starts and the conversations, that July and August, there were 45 frac crews running in the field. And that's good news. I mean, they're still hiring, they're still looking for people, but you see that reflected in the numbers with more than 100 new wells being completed in both of those months. You set record production. That's kind of the rule of thumb. If we complete more than 100 wells, production's gonna break the old record. Talked about the weather. It was near perfect in August and hasn't been since. So we'll just kind of see where that goes. But it was nice to see. Not only did they catch up with the rigs, but the wells waiting on completion went down, and the inactive well count went down. So again, we're starting to see the increase in activity make a difference in a number of different areas. When we get to the gas capture and the flaring, Statewide, no change. A little bit of a reduction in the Bakken gas capture. The non-Fort Berthold gained some ground, but that 17,000 barrel a day oil production increase on Fort Berthold caused the gas capture on Fort Berthold to drop from 76 to 73%. So you can just really see that the infrastructure there is not keeping up. And we've had 2 operators in this week talking about their difficulties and trying to come up with some solutions. So hopefully we'll continue to work on the right-of-way issues there. That seems to be the #1 issue, but we're also seeing some of the processing plant delays are rippling back out because in particular, Little Missouri 4 is designed to process gas. At least half of the new capacity there is going to be gas from Fort Berthold. That delay is going to cause some real problems. There's a ribbon cutting today, new plant opening today, Wild Basin up by Watford City. 200 million a day capacity, should be fully on stream next month. And that's great, but the next plant opening isn't happening until the second quarter of next year. So we're going to go into winter where we are. And that's going to create a real tug of war between drilling rigs and completions and gas capture. And as you know, November 1, we're scheduled to increase the gas capture requirements of the commission to 88%. I think it was nice to hear from the folks at Oasis Midstream that are opening the Wild Basin plant today that it's the gas capture requirements that drove that investment decision, that motivated Oasis to get in the midstream business and get control of its own gas processing and gas capture future. So that's good. The last thing I'll talk about is the BLM venting and flaring rule. The new final rule was issued September 18th, and that rule basically rolls back all of the problematic parts of that BLM venting and flaring rule, the things that we found objectionable. And I really want to give some kudos to the Department of Interior and the Bureau of Land Management. Probably the trademark thing in this new rule is a provision allowing for tribes to seek BLM approval, to have tribal rules apply, and a provision recognizing that states and tribes should be in control of gas capture and flaring within their boundaries. So a great revision to the rule, and I think it's going to be very helpful. So we'll see what happens to it going forward. It's not all that old, but it was published in the Federal Register on the 18th of September. So a lot of big news in North Dakota today. Brand new gas plant coming online. Next one will be second quarter of next year. Venting and flaring rules that recognize North Dakota's gas capture rules and open the door for tribal regulation on Fort Berthold. Clearly we need something to change in there. And then new records in terms of oil production, gas production, well counts, and the amount of gas processed. We'll take questions.
Any room? Yeah, can you elaborate on the 2 discussions that you had on gas capture with those companies that were not meeting the 85, or with those companies that are concerned about the November 1?
Yeah, so the question was the 2 operators that we spoke with, what is it that's causing such great concern? And it's the 88% that's coming up on November 1. The meeting yesterday centered around just how far it stretched that operator to get to the 85%, and that they think they're going to be okay. Well, they're pretty sure they're okay in September. They think they're okay in October, but they are not going to get to 88% in November. So they're trying to look at all the options: produced gas storage, natural gas liquid capture, electric generation. They're pulling out all the stops and looking for every option that they can, but they still have some serious doubts whether they're going to get there. So it's the 88% that's got them really worried. And they were a company that counted on Little Missouri 4 as a place to go with their gas. So they got very aggressive in July and August, completing new wells, and then only to find out that it's not going to be there. So that's just one. And again, why is Little Missouri 4 not coming online in November? It's a workforce issue for Little Missouri 4. The information we got was that they were only able to get about 40% of the pipe fitters and welders that they needed to put that plant together and get it up and running on time. So it's going to be 6 months behind, something like that. Long answer to a short question, but it's the 88% that they're concerned about.
One question on here from Brian with Platts is there a relationship between the climbing rig count and then actual supply? So moving from 61 rigs to 67 rigs, does that translate into any certain values for potential barrels per day of an increase?
Loosely, yeah. So the question was, how well can you tie rig count to production increase? And rig count, of course, is like an early indicator, I guess you would say, of production increases. But as we know, industry has begun to settle for a large number of wells in the DUC category, or the non-completed category. And so they seem to be, completely unafraid of making the investment to drill a well and then leave it in the uncompleted category for a year. So the rig count is a good long-range leading indicator, but the number of frac crews and completions is probably a better indicator. And to the best of our knowledge, those 45 frac crews are still out there working. So we ought to see September and October numbers with some significant production increases.
Any other questions in the room? Got a couple others here. With some of the latest presentations at the Petroleum Council's annual meeting, are there any updates on the USGS assessment of the Bakken and Three Forks formations?
No updates from our shop at this point. We had a geology staff meeting 2 weeks ago today, and again refocused our efforts and our thoughts on what needs to happen to make sure that the information that the USGS gets when they come here in 2020 it covers the entire basin, the whole stratigraphic column. But no, I haven't heard anything specific. Obviously, the presentations that Continental Resources made in Fargo would indicate that the USGS is going to have to greatly update or upgrade their potential. But keep in mind, the USGS does undiscovered potential reserves. So they're only going to look at undrilled locations. And so the number of undrilled locations goes down every month, but the productivity potential of those undrilled locations goes up. So I think we're seeing, as you saw in the presentation, wells are 3 times as productive as they were the last time USGS was here. So I think you could expect an overall net increase, but yeah, we're really beginning to focus on the fact that those folks are coming here in a year and a half, and we're going to have the data to really help them see what has happened in terms of undiscovered potential.
Thank you. Can you speak to production increases and possibly how the Permian is playing into that?
So there was some conversation on the Permian Basin and some of the constraints that are starting to come to play in the Permian, as well in North Dakota, at the Petroleum Conference, Council's annual meeting in Fargo. The Permian, of course, is the big dog in this fight. I just was reading an article last night about Apache's acreage in the Permian with thousands of feet of shale potential under their play, and so lots of opportunities to drill. On the other hand, the Permian is starting to experience all the same things that the Bakken has experienced. Their oil pipeline export capacity is full. Their natural gas pipeline export capacity is full. Their saltwater handling capacity is nearly full. And so you've seen the rig count in the Permian has pretty much gone flat to sometimes slightly declining. And I think, that's the result of all those constraints. All that having been said, they don't have winter down there. So they will be able to build stuff during the 5 to 7 months that we cannot. And so it's easier to relieve those constraints when you're closer to the Gulf of Mexico and you don't have winter. One of Governor Burgum's stated goals is to avoid, to the extent possible, chasing capital investment out of the state by, too heavy of regulation and decisions that might chase drilling capital, fracking capital, particularly gas capture capital out of the state. So that's something that a metric that everything we talk about is going to be judged by. That question will be asked with every proposal that we put out there.
Any other questions? I do have one last one that popped in. Oh, sorry. In relation to gas capture with the 88% getting closer, is there any estimate for what restrictions may look like? Volume or wells?
No, it's really too early to tell what that could look like. I do know that Governor Burgum wants to have a robust discussion of the status of gas capture and how we got to where we are at the October Industrial Commission meeting. So October 25th, I think we'll get a much clearer picture of where the commission members sit on this, and hopefully some really good information about how we've landed at this place. And it'll be a lot easier to talk about after that.
I guess following up, I don't know if you could comment on this, but last month you said that you anticipated there would be production restrictions from July flaring, and then there were none. Can you comment on that?
Yeah, absolutely. So we when we had the Director's Cut webinar, we actually had, I believe, 4 companies on the list that looked like production restrictions were very likely. A week or so later, there were still 2 companies on the list that my production auditing staff were almost sure were going to end up with production restrictions. However, they managed to get force majeure letters from the midstream companies that got them just across the finish line. So that's how absolutely tight it is. And in fact, both of them were in to visit us this last week. So knowing that with the July numbers and now with the August numbers, and the auditing folks haven't done the August numbers yet. They're working on that now. But knowing how close they came in July, they're almost certain they're not going to make it with the November 88% capture. And I was talking to some operators in Fargo at the Petroleum Council meeting. I don't have hard data. I can only go off what they tell me anecdotally, because I can't look at our information and calculate how much production is being restricted. But out of the top 10 producers that I spoke to, the overall estimate came to somewhere in the 50,000 barrel a day range. in terms of self-imposed restrictions to meet the gas captures. That gives you an idea how much higher our oil production could be, but there is a lot of restraint being exercised by the oil and gas operators, and so the last thing they want is an order from the Industrial Commission telling them how much production to restrict where. So they're very proactive on that. That's something we totally did not see back in 2014 before we started to have gas capture regulations. And so on the one hand, you'd like to see that production higher, but on the other hand, I think it's a kudos to the industry for being very proactive with that and looking at, you know, that sort of self-imposed dietary restrictions, if you would have it, to keep themselves in compliance. So.
All right.
Great.
Other questions?
Thanks, everyone. You stealing Justin's quarters?
Hiding.
Yeah. Hiding them from.
Perfect. Good on your side? Okay, well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. Getting right into the regular set of data updates, looking at production from the neighboring states outside of North Dakota. Continued slipping production, both in eastern Montana, South Dakota. Currently, as of today, 0 rigs operated in either one of those two portions of the U.S. Williston Basin. Just a quick update on the month-to-month changes in both oil and gas. Lynn alluded to this, again, up in both categories, not to the same volume perspective that we've seen in the past, but still a pretty sizable increase that was to be expected with the amount of activity and price and markets that we've been seeing through the summer months. When we look at oil transportation, not any major shifts percentage-wise from July to August. I'll talk in a moment about some of the finer points of the transportation dynamics. Again, slide 5. When we were looking at August, we were still seeing that Brent WTI price spread hovering right around that $5 differential. I'll touch here in a moment. That has gotten significantly wider since that August timeframe. But if you look at the various line charts, very consistent throughout the summer months, June, July to August. As alluded on slide 6, this is that Brent WTI spread. You'll notice really starting in September, that significant increase in spread. And so if you remember back the comments I've made in the past, anything above typically $5 to $6 in that Brent WTI spread, we start to see barrels that have the flexibility start to move onto the rail network as opposed to a pipeline system. Very consistent rail volumes as well coming into August. Again, just very minor changes through the summer months. When we look at where those barrels are estimated to be heading, there has been some major shifts in that front. So the volume-wise, very consistent, but the destinations that has seen some significant shifts through the summer. So this is July data. That's the most recent available. Market share is appearing to be that 3/4 of the oil leaving by rail in North Dakota heading to the West Coast refineries. Significant drop in the amount of traffic going to the East Coast refineries. And then also an interesting little uptick into the Gulf Coast region by rail in North Dakota. That had largely gone away for a number of months, and it did pop up. We'll see if that is any type of long-term trend. Obviously, the Gulf, as you'll see in a moment, has some pretty strong pricing relative to the other portions of the U.S. So looking at July, what the refineries are paying their acquisition prices from the EIA, PAD 5 over on the West Coast was the highest priced market. Again, supporting some of those other data that you just saw with barrels leaving North Dakota by rail, going to that West Coast. It is a shorter distance. It's a single carrier transport from North Dakota to the West Coast. So that does work together with what we're seeing in the data. And then as well, the Gulf and the East Coast still relatively strong pricing that, again, would incentivize folks to look at that option for crude by rail as well. Look at pricing today, continued strong spread over $8 Brent WTI. And then as well, Gulf Coast pricing continues to be relatively strong versus what's taking place at the Cushing Mid-Continent marketplace. Truck traffic continues to be relatively high coming into North Dakota, just over 80,000 barrels per day net difference between imports, exports. So those are additional barrels moving their way into North Dakota. I'll touch here in just a second on what we're seeing for pricing in the region. Canada, if you're following any of the recent news, they've had some significant price challenges for Canadian crude grades trying to work their way into the U.S. marketplace. This was, as of yesterday, reports coming out that the WCS, or Western Canadian Select crude grade, had an all-time high differential to WTI. It was 52.50 below WTI, so a significant price deduction for those Canadian crude grades working their way into the U.S. That does start to impact North Dakota, or we want to keep an eye on that. A lot of those crude grades flow through Clearbrook, Minnesota, on their way into the U.S. Refining centers. That's really the first major market point that North Dakota starts to get into the same market environment with those Canadian crude grades, and we have seen Bakken Clearbrook prices start to weaken as well here in just the last several days to a week or so. So we'll keep an eye on that. Pricing continues to look strong in Wyoming, the Gulf Coast, so those other traditional pipeline routes out in North Dakota. But as we move forward, we need to keep an eye on that as pipeline transportation options start to get constrained as production increases going into next year. These things will all play an effect on how North Dakota crude oil gets priced. So now switching gears to the natural gas side of the world, just a 1% shift in statewide volumes. The one portion of the industry that, I don't know what the correct word, if it's succeeding or reducing its flaring percentage, would be on that blue portion, the number of wells that are not connected to a pipeline system. So that 14% month to month through the summer remained consistent, the percent of gas being flared from wells that do have a pipeline connection. And then again, very consistent for the last 4 months, just very minor changes in where the challenges sit. It continues to be that gathering infrastructure from the wellhead to one of the processing facilities. When we look at the pace of new well connections for the gas gathering industry, again, I've pointed this in the past. Here in 18, we've seen a number of months where the number of new wells producing gas has outpaced the new wells selling gas. So again, keeping a close eye on this. A number of challenges may be underlying the fundamentals behind this graphic, but the hard numbers are such that the producers now are, at least for the month of August, bringing wells on quicker than the gas gathering industry was able to keep up with new connections. And then from a processing standpoint, again, we're expecting production to stay above processing plant capacity until late next year. Earlier this year, when production had started to exceed plant capacity for the first time at a major scale in many years. And even with the new plants coming on, the expectation is it won't be till next year that the industry catches up. And when we look long term, again, it won't be until it will remain caught up until the early 2020s, at which point production is expected to exceed plant capacity again. As far as this graphic, there are a couple minor changes from a month ago when I presented this to this group. The Demicks Lake 2 project was announced in late September. A couple other facilities have been in contact with me, and they've been able to increase some efficiencies at their plants. So a number of the plants saw some minor increases in throughput capacities. This is all now updated on my website if you want specifics on individual companies or plants. All that data is online now to support this graphic. So with that, I'd be glad to answer Any questions from the group?
How quickly do you expect to see the result of the Oasis plant? How quickly could we see gas capture improve with that new plant?
I would say immediately. So once that facility is through with commissioning and starts its full runtime, I would expect that immediately we'll start to see an impact in the amount of gas being captured.
I have one question on here. Just, are you aware of any, or can you talk to any new pipeline infrastructure that might be coming down the road or in a few years?
So when we look at all of the major segments of transmission needs out of North Dakota, whether that's crude oil transmission, natural gas liquids transmission, all of the forecasts in all three of those categories are such that we will be in a position of needing additional capacity in the coming years. All of the major projects right now are still being worked through at the company levels, and so nothing's been made public at this time. But just with the forecasts and the market conditions going forward, I think it's safe to say that we will see additional expansions out of the region. Just the details surrounding it right now aren't available.
Do you know the capacity of the Demicks Lake plant?
So both the Demicks Lake 1 and Demicks Lake 2 it's 200 million per plant, so a combined of 400 million. Demicks Lake 1 will come on shortly before the end of 19, with Demicks Lake 2 scheduled to come on first quarter of 2020.
Any other questions in the room for Justin?
Okay, well, thank you very much.
Okay, thanks, guys.
I don't know how you can keep all those gas plants in your head.
I
I can't.